Manish Sontalia is head of equities PMS at Motilal Oswal Asset Management Company. Is joining us right now. Manish, it's a pleasure. It's been a while. Thanks very much for joining us. You're joining us on a day when everything is getting smashed. You heard the technical and Mitesh earlier. Technicians sell weakness and buy strength. You look to do the opposite. I mean, you look to buy when there is a sale going on. I mean, there is a sale going on. Now, it will get cheaper or not, that will be wiser in hindsight. But what do you make of what you're seeing out there in the market, Manish?
Yeah, there's some blood on the street, but I think it's going to get nastier even from these levels, given the excesses that have been built in the market in certain pockets over the last 2 years. I think there's some more room on the downside. So while the previous lows of 16,400 are not, it looks like we'll get tested, or maybe we'll go even lower. But one thing to keep in mind is that, BFSI as well as technology make up 55 to 60% of the benchmark. Now, out of these two, big tech is seeing heavy selling across the globe, and India is not going to be spared either. But the silver lining remains in the BFSI space. That's quite attractive space to be in, given the outlook into the future. So whatever we may see beyond below 16,000 or thereabouts would be slightly on the excessive side, on the downside. But clearly the mood of the market is such that it looks like that we are heading even lower from these levels.
Manish, from the banking and financial space, I think a couple of your top two holdings of the banking list, at least, is ICICI Bank and Kotak Mahindra Bank. They have done very, very different things, I think, in the last 1 year or so. Kotak Mahindra, I think it's nearly at the pre-COVID levels. I mean, no big returns in the last 12 to 15 months. Or do you believe that the time has come now for some of these larger banks to play catch-up?
Yeah, absolutely. I think, the environment is conducive for larger banks as opposed to mid and small cap banks. I mean, it's clearly out there, given the capital buffer, the capacity to bear losses and so on. So I think what we have seen in the case of ICICI Bank, and there's not one single person on the street who is not bullish on ICICI Bank. But given these large banks have raised so much of capital during the pandemic, all of that is getting offloaded into the market. We have seen capital raising out there. But purely on a fundamental basis, I think there is room for these larger banks. Out of them, both ICICI Bank and Kotak Bank, the more pick and choose bank is your Kotak Bank. They don't try to excessively press the pedal on lending when the environment is not very conducive. But the very conducive liability franchise in the form of 60% CASA ratio, literally gives them free money. And whenever they can press the pedal, they will do that. So I think comfort on Kotak Bank in terms of asset quality and capital buffer is very much there. Right now, they are doing only mortgages, primarily. The opposite we have seen in the case of ICICI Bank, where 25% NII growth, 16-17% loan growth, NIMs at 4.1%. It couldn't get even better from these levels. So I think the target on both these banks are on the upside. Maybe ICICI Bank and maybe a State Bank of India, which has really outperformed, will continue to outperform going into the near future. But as a good hedge in the banking space where risk is to return, calibration is concerned, I think Kotak fits very well, as opposed to an HDFC Bank, which is grappling with a lot of issues on operations.
Sure. Zomato is now on down circuit. It's 20% down now, so limit down on that one. Can't move beyond this, at least for the day. 90.95. Manish, good afternoon. Buying Zomato at 90?
No. I think markets are likely to test the IPO price of 76. It's a good space to be in, but as we know that valuations was nothing which was right about the valuations post the listing or anything like that. So I'll wait for better prices to, on all these consumer tech names, be it a Nykaa or a Zomato or something else. These have more room to correct on the downside. So I'll be watching out this space, but not yet pulling it.
All right, Manish, one of my dream bikes from the time, for the last many years has been the Royal Enfield. As a customer, purely, I'm very satisfied. Now, that's a two-wheeler major that, that you have been invested in. I often think maybe it doesn't have that EV risk, because someone who's buying that Royal Enfield, he's not going to be really into that EV play. Your take on the stock, or do you believe the best is behind?
So it all depends on how you look at the demand supply scenario. I think there is enough latent demand and enough has been spoken about it. Last month they clocked 70,000 numbers, completely, caught everybody by surprise, because we are used to seeing that 65,000 units. I think this space, again, as you said, that is not going to be, disrupted by the electric vehicle. It's more on the commuting side where electric vehicle two-wheelers are going to disrupt. I would think that we are trajecting on the lower side of volumes, and given the latent demand in the system, incremental, if supply side challenges gets resolved, there is room for both earnings growth and valuation expansion to happen. And as a matter of fact, our positioning on the automobile sector as a whole, which has not done well over the last 5 years or so, is that primarily everything negative that could have got priced in has already got priced in. And if the business model suggests that you're not going to be disrupted by the electric vehicle movement, then there is scope for market cap increase in all the names. Whether it be a Maruti, whether it be an Eicher, whether it be a Bharat Forge, and so on and so forth. So I would be overweight the auto space, and that's why it doesn't look like that you have a major valuation correction that could happen, even if the benchmark indices were to head lower, and maybe even significantly lower. I think this is one space which is likely to perform.
Okay, all right. Hoping that you have a good ride on the Eicher Motor stock, and in fact, it gives good returns for you all. Thanks so much, Manish, for joining, and I'm going to have a good ride because I'll ride the bike home. Okay, all right. We need to take that mandatory last break. But as we do that, here's something that you, our viewers, must take note of. CNBC TV 18 and the National Stock Exchange have come together to promote investor awareness through a very special campaign, Informed Investor, and that empowers you to make the right decisions with your money. All investors, well, you need to keep